Welcome to Trading Nation. I'm Mike Santoli. Markets taking on water from all sides Thursday. A sell-off in the broader indices accelerating on worries over U.S.-Saudi relations, escalating tensions between Italy and the ECB, and turmoil in the Chinese stock market. So, should investors be afraid of more downside from here? Craig Johnson is with Piper Jaffray, Stacey Gilbert with Susquehanna. Craig, a lot of people say after you have a rebound off a sharp low, we're going to need perhaps a retest of those lows. Is something like that underway?
Yeah, so if we look at the chart, Mike, on the S&P 500 index, you can see the markets went parabolic here back in the January timeframe. We had this sharp correction back in February. From our perspective, we're coming back and retesting. The S&P 500 is retesting their 200-day moving average right here on the charts. I would also point out that this entire big long uptrend support line we have in here has just been violated. And from our perspective, it's going to take more time to really shake this out. Mike, I'll tell you that when I look at this chart, I look at the participation in the market, how many stocks are in uptrend, how many stocks remain above their 200-day moving average. This is really your next support to come into play, right at around 2,700. That's going to be the next level we really want to be watching for the S&P 500. And I suspect that this is something that's going to be touched in coming perhaps days, weeks, or next couple weeks.
All right, well, 2,700, that would be slightly below the very lows that we got intraday last week in the S&P. Stacey, we now see the CBOE volatility index jumping back above 20 at the highs last week. I think it was closer to 29. What are you seeing in the options market here?
You know, it's interesting. One of the things I would say, and I'm glad you brought the VIX up here, Mike. One of the things that I think is interesting is that I think investors weren't prepared for volatility this year. I think we all said, yes, this is going to be a more volatile year, but not necessarily understanding what that meant. And what I think is really telling is the market knows it's going to move. So the implied volatility, we can look at it from the S&P 500 implied volatility, or we can use the metric, the VIX, which is some sort of variation of the S&P 500 implied volatility. And it tells us it's going to move a little bit every single day, right? So if the market didn't move, we know that that's just not consistent with what should happen. But what's interesting this year is so far we've seen 29 different days where the market has moved more than 2 standard deviations of what was expected. So what I mean by that is typically a 2 standard deviation move, we should see it once a month. We've seen 29 so far this year. So I think the market underestimated the potential for volatility. And I should stress that some of those days were up as well as down. So I think what we need to recognize is we're in a new vol regime. And to Craig's point here, there is going to be some fluctuation. I think investors are not quite sure what to make of it. But from an options sentiment perspective, we are not seeing any paranoia out there. We're not seeing any panic at all. And in fact, we've seen investors sort of sell some of their protection, roll it around a little bit, but nothing out there suggesting that this is the big one. I think investors are just recognizing that we're just in a different vol regime.
All right. Yeah, seemingly a less steady tape than last year, but traders seem to be adapting at least for now. Hopefully that is not a blind spot when they're not expecting this to be the big one. Craig, Stacey, thank you for joining us today. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.